Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market had good gains in the last week as post-election rally turned into a buying panic on Wednesday. Investors bought it, actually, like it's 2016 all over again. You know, the old adages for boat owners is that their happiest days are when they buy their boat and when they sell their boat. Well, the stock market was a lot like that on election day, as investors bought the stock market very strongly in 2016 on the very pro-business policies and lower taxes that were expected out of the new President Trump. And then again, they bought the market strongly in 2018 on the election, as it appeared that there was going to be gridlock and the president has lost some power. So they bought it when the president came in and really happy, and they bought it when the president lost some power and seemingly really happy. Well, I'm glad everybody is happy, but things did change as we got later in the week, as the market did start to turn south again. The rally came with tech stocks and e-com and energy stocks and drugs all leading the way up, and what appeared to be a massive reversal in the market. Energy we say no to, as that's been really bad, and we have a lot more to talk about in the energy markets later on in the show. And healthcare, well, they enjoyed the fact that there would be gridlock and maybe there could be no deal that could lower the prices for them, so that's why they bought those healthcare stocks. Some stocks were just oversold and really needed a bounce, and I would say that this bounce really relieved a lot of that oversold condition. Late week, as the reality set back in, we had some pretty good selling, and much of those gains were lost. Now, not wanting to be too political, as simply the viewers that I have often write me when I say things that are political, and they tell me to cut that out. But it's pretty hard for me when we get into, especially in election week, because simply the Republicans, well, they blew it. The government got bigger than ever on their watch here over these last couple of years, and that debt bomb keeps growing. The Fed still controls the economy, and healthcare wasn't solved, nor the immigration, nor being able to come up with some reasonable policy on gun laws. Well, so probably gridlock is nothing to celebrate. In the meantime, the huge China economy is slowing. Eurozone is about to end all of that stimulus that they've had, and starting to really significantly end, cutting back on their buying up of all of their securities. That's the QE coming to an end. You could say it's QT, or quantitative tightening, as they start selling that stuff off, as the United States is doing, though not really picking up the pace on that yet. And Japan, Kuroda, he came out from the Bank of Japan and said that simply large-scale monetary easing is no longer the best policy. So there are things that are changing throughout the world. Of course, we have seen our central bank here in the United States cause this big up move in asset prices as they kept the interest rates down to a very, very low level. I want to share a book with you right now that I really think you ought to read. Here it is, Greenspan's Bubbles. which is a book written by Fleckenstein. It's about 10 years old, this book, and it talks about the age of ignorance at the Federal Reserve. Well, it might have been a long period of ignorance, and I think that's a book you should really read, because it was Greenspan that started the activist feds that we have right now and essentially blows up these bubbles that are destined to come apart. So we had all of this stimulus in 2008 to 2018, and stocks went up. And now we see that this coming drain from around the world, or at least a lack of the stimulus that they've had, well, that's potentially bad for stocks. I would say that it's basically sad that we have no pricing reality, and that's a very libertarian comment, that prices are just based on what the central banks in the world want to affect, making us feel rich as prices go up, but really hurting middle economy when they do that. So now we've had this stock market, which came down pretty sharply, and then had this big rebound. And our analysis has showed that there was a corrective period coming right in here. We're going to say now that we've seen the worst of it. We expected the low to be in late November. The low price that it made, we think, is about the worst we'll see at that 2,600 level. And now we're probably in a testing period. So we're looking for a period through sometime late November, early December of choppiness, of the market continuing to move up and down, but basically having established the low as far as that correction goes. As far as after that, well, we think that we're going to get a rally into early part of 2019, and then we're going to see. But we're going to say that we think that the odds are pretty high that rally fails. It might get a little bit past the highs, it might fall a little bit short of those highs, but we think what's happening is a very big top that's forming in the market, and then a potential for a very significant bear market coming after that. Stay tuned, because we're going to bring a lot more of that over these coming months as we think this top is forming. Let's take a look at what happened in the stock market this last week as we look at the 60-minute chart of the S&P 500, that is the ES. Remember that what we're looking at in here is a period of the gray areas that you can see, which is overnight, and the white areas that you can see is the actual trading during the trading session, during the regular hours. Monday, we had Kudlow come out and deny that they're working on any kind of a trade deal, and markets were kind of soft in there. Trade sanctions came on with 8 exemptions, so there was basically nothing in there that had any teeth as far as that goes. But then an Apple downgrade as they're cutting production hit the markets, and the NASDAQ fell a quick 100 points. That did not last, as the S&P 500 lows held, and we got this rally going on. The financial and energy sector lifted the market despite weakness that we had in Apple. Then we had election day coming on Tuesday. You could see that the market pre-election got strong and continued on the upside. The buyers were just ready to buy it, apparently, no matter what. And then as the news came out and it appeared that the House was going to be owned by the Democrats again, investors cheered that gridlock, and it moved up overnight. News came out, though, of mortgage apps at their lowest level in 18 years, as there's a real bite going on as interest rates are moving up. Market rallied so strongly, investors think 2016 all over again, and what really happened was that President Trump came out really offering to be cooperative. He had a very good tone there. He says, bring a plan to me on economy, infrastructure, healthcare, all of those things, and we're going to look at that. And then the tech and healthcare surged, and we got this big up move in the market here. Then on Thursday, we got some reality coming back in the market. The Italian bonds fell, as they say their budget's going to be over the 3% number deficit, which the Eurozone really wants to have nothing like that. And so the Eurozone got hit, the Euro got hit, and the FOMC news then came out. It was a day later than normal because of the election. session, and they said economy is strong, inflation is near target, and gradual rate increases to continue. It was a pretty hawkish statement. And then China data came out pretty weak on Friday. Oil below $60. It's been a massive plunge. Stay tuned for my very broad analysis on that. And we're going to look at the PPI up 0.6% year over year, up 2.9% on the headline number. And that certainly looks like it's not what the Fed was looking for. So they say inflation is near target, and we see inflation starting to tick up. And the stock market did not like any of that news. And also the people that bought in this big rally here on Wednesday may be having second thoughts, which is not a surprise to us. And like we said, there's likely a testing period right ahead of us right now. Oh, sorry about that. In this market. So that is a look at the 60-minute chart of the S&P 500. And we can see that the market is trying to reverse here with about just about 2 hours to go on Friday, on what is a relatively weak day. Stocks for the week, the Dow Jones got the best of it, about 2% to the plus side. S&P 500 up about 1.5%. The NASDAQ only tiny little gain, and the Russell about unchanged on the week. Well, you might ask, why are the Russell stocks hurting? In other words, why are they participating less right now? And it's because of interest rates. If the Fed is hawkish and interest rates are likely to go up, remember that those stocks, the third tier of the market, or worse, the smaller companies, they're the biggest borrowers and the most dependent on the interest rates being low, and that really bites into their cash flows and bites into their earnings, or in the case of losses increasing. You know, the Russell has got a massive percentage of these companies in there that are losing companies, and this hurts them, and that big potential increase still in interest rates going to hurt. 30-year bonds up about 0.75% on the week. 10-year yields down about 3 or 4 basis points. The dollar gains about 0.5%, modest upside tick in there. And gold was bad Friday, moving down as the dollar moved up. And I think we're in a capitulation stage, down about $26 on the week. And I think this is a final down move before the gold market moves up and the dollar then moves down sharply. Watch our Future Speak video where we talk about the potential for a big downside move, and I'll show you a little bit more about that in the short-term view. Oil incredibly sick, down another $2.80. Like I said, down about $14 on the week or worse, and this is down $14, sorry, in the last 5 weeks. And I've got some great stuff to show you on that in the oil market. We are looking for a bounce coming up in the oil market, and I think it's going to be pretty feeble. So that's the end of the first segment. I've got something very interesting to show you here. Before we get to the best and worst, I want you to watch this amazing stuff. It's on our charts. And what I'm going to do is show you our deeper analysis in the energy market, in light crude. And I think you're going to find this very interesting. I want you to see the breadth of the things that we look at in here. So take a peek at this. All right, you heard me talk about the weakness in the energy market. Specifically, the light crude market is what we focus on in our short-term view. I want to show you something a little different. I'm going to give you a deeper look here, as I can use this to illustrate our level 4 charts. That membership is all in. And what I'm going to show you now is an example of our 24 different futures charts that we share, each one having 4 different charts in there as we look at weekly, daily momentum, and intraday charts. We do our charts in the futures a little bit different than we do our charts in equities, as we expand them further for shorter term traders. I think it's just a phenomenal amount of information, and I'm going to show you that right now as we look at light crude, weekly, daily momentum, and intraday charts. This is great that we go down to the intraday charts, because that's really for shorter term traders, day traders, scalpers, even strategic option traders get a tremendous amount of information from this. We're going to start out by looking at light crude. Now, what we do is we post our chart grids in our website for our level 4 members, and you will be able to access that if you become a level 4 member. Of course, our preferred broker is thinkorswim, TOS, and these charts are for the thinkorswim platform. I'll tell you a little bit more about that in a moment. But first, I wanted to give you an example and show you our deeper analysis in the light crude market as we look at these charts. So we start out pretty much as we always do, looking at the weekly chart with our cycle analysis on the light crude market. So we'll start out by examining what we give you here in this market. Now, let me just grab my pointer in here, and you can see that this illustration that we have right over here shows you a lot of information. You can see in here that there are what we call nested periods for these cycles, when minor cycles and larger, intermediate, and dominant cycles come into play. Just so happens that when the more cycles that are moving down to a nested period, the greater the possibility for weakness on the downside. And you could see that happened in here as we had these 5 weeks on the downside of some more than $14 and pretty much a collapse in the light crude market. Now, when you get to the bottom of these periods is when you then get the most velocity, and then you move to the upside. And that's what we have going on right now. So we're likely to get a bounce, and you can see our forecast in here shows a likely bounce coming into sometime the early part of next year, and probably getting into the 65 area or a little bit higher. So that's an intermediate look that we're showing you right there. And you can see our forecasts in here and the support and resistance that you can see, and the note that we have here that a likely major top is forming. That we talked about this in our Future Speak segment on Wednesday. So this is the weekly pattern that we get. This is meant for longer term view of the market. So now the way this works is that there's a little arrow up on the top right over here, and I can hit that right arrow and scroll, and it's going to bring me to the daily chart. You can see, and I want to show you the kind of information that we have here on the daily chart. First of all, we have cycles on here, and you can see that. And our expectation was that it was going to decline. That's in that yellow zone that we have talked about. And it went down further and longer. So we're identifying a very weak period and a cycle shift. We also have on here our just amazing option bias indicator. Now you can see right over here there was a top warning that we indicated on this, and you can see that essentially called the top right in over here. There was another top warning right over here, and that called the top right over here, and it's been signaling a bottom warning, and sometimes these are early, and this one has been a bit early as the market has continued on the downside. There are periods where we have good strength right in here, and you could see the market rallying, periods of weakness right in here, and identifying that you could see the market declining. This option bias indicator is tremendous, and essentially we put that in there and named it that way to help our option traders be able to understand the momentum, be able to understand how to affect the direction of their positions, and of course all traders can use this. But I'm going to break it down further when I look at momentum. So this is our daily chart, which shows our cycle analysis, and as you could see in here, and I'll just blow this up a little bit further so that you can see our projection in here that we'll show you when we get into the short-term view also, is that it will make a bottom in here, and we have had this this projection in for the last week. So this shows you the extreme weakness that we've had, but we expect that it's going to bounce and get up into the 62.5, 63.5 area in the next week or week and a half, and then run into problems again. So you can see we put the support resistances in here, and you get our option bias indicator, our projections, all of that on the daily chart. So now what I'm going to do is hit the right arrow on the top, which you can't really see. I can bring this down. You can see that right arrow right there on the top. See those left and right arrows? And I'm going to click on that right arrow right there, and I'll just expand this chart up again so we get more room. And what you'll see in here is some more fantastic information. This is our momentum chart. So I'm just going to bring this in a little bit closer so that you can see. This is the daily momentum that comes off of the slim ribbon. And we also have in here our projection oscillator. Well, this is our favorite pair of tools that give us buy and sell indications and also market condition indications. We will put those in here, and essentially when the momentum is negative and the projection oscillator gets overbought, it's a sell signal and it has a tremendous value. When the opposite happens and it gets way oversold, and the momentum is positive, well, that would be a buy. I can go back over here and try to look for one of those, and you could see there are none. So there were no buys. There was a buy that was setting up right in here, but then that aborted, and when that happens, we will say that. Also, on the bottom is the fantastic fantastic indicator from Thinkorswim called Market Forecast, and that gives bottom warnings, top warnings, and good indications of problems. Now, there was a top warning right in here that I see I didn't even put in, but when they all get over 80%, that's an indication of an overbought condition, and that really worked well. So that's one I missed putting in, but it still gives you an idea how the value in there. So this right now that we can see is still in very negative momentum on a daily basis. That is for light crude. Now I'm going to move one click to the right again. We have seen so far the weekly cycle analysis, the daily cycle analysis, the daily momentum, and now the intraday is what I'm going to show you, which is really phenomenal right in here. So right now what I want to do is show you everything that's on here. The indicator that's on the top is the slim ribbon. It gives us momentum. In addition, we have in there the daily ranges in there, and we get signals off of momentum and daily ranges. As a matter of fact, if you look way on the left over here, you could see that the short-term negative trading bias was indicated at this point. That short-term negative trading bias stayed in effect this entire time that we're going in through right now. It would have kept your bias on the short side that whole time. And every time there was some minor rallies going on, and those rallies came up into areas where they indicated that nothing had changed, they were sells. You could see the projection oscillator giving all of these sell indications right in here, and each of those have been tremendous. And when you get into periods where they can't really rally at all, that's extreme weakness. So that is the projection oscillator signals with the signals that we get off of these 2-hour charts on the intraday. On the bottom is the askSlim market condition indicator. This is a pretty involved indicator, multiple time frames used. It is affected by the longer term time frame, so that when you get crosses through what we call the swing zone, the plus 25 and minus 25, it gives you a negative indication saying longer term patterns are turning negative. It does the opposite on the positive side. And when it goes down and stays extremely negative as it is right here, that is a really bad indicator that you see in there, really negative. And when it's really green and on the top, it's really positive. So everything on this page for the intraday has been extremely negative here in the a 2-hour chart, and it's been just tremendous readings. Again, I'm going to go back to the daily chart, daily momentum here, the daily cycle chart right in here with the option bias indicator, and our weekly information right in here. We put all of this tremendous analysis into all 24 of the futures that we follow, 6 segments of the market. Just incredible information. Again, this is for the Thinkorswim platform, our preferred broker. If you're not a Thinkorswim, if you don't have a Thinkorswim account, you can make a request for me to send you our link, and then we'll get credit for that if you open up an account, which is very important to us. Now, also want to let you know that 3-month members, in other words, if you join level 4 membership for 3 months, you can get a $200 discount on our cycle analysis workshop, a phenomenal 20-video cycle analysis workshop. Nowhere else will you ever get this. It took me 2 years to write and over 6 months to produce. And those people that have taken it just keep watching it over and over again. As an all-in level 4 member, you will then also get our rankings and trade setups. You will also get our whole video library with over 300 videos in there. Actually, it's probably closer to 400 right now, in 8 different segments, including the Market Week show archives in there. And you will also get our phenomenal stock index report that goes a long way in explaining all of this analysis and momentum to you. Wow, all of that. You can try it if you don't think you're ready for the bigger commitment by writing. Go to our front of our website, to the front page where it says contact, and you'll be able to click on that and request our special. That's 1 month of everything I just mentioned for just an amazing $73.50. You'll be able to just see it all, get a great feel for what we do, get 4 weeks of updates of our charts plus interim updates, and of course rankings, trade setups of the 80 best symbols that there are to trade, and our huge library, $73.50 for 1 month of all that. To help support our team, which does a tremendous amount of work to bring all of this to you, and it's quite a large team, so you can see the kind of work that we do. Please do write us and try it for 1 month. I think that you will be amazed at how much you're going to learn in that period. And then if you don't like it, you don't want to stay, just cancel, and that'll be the end of that. And of course, as a member of level 4, you will be able to send questions to me and ask me about analysis, the analysis we show, or your analysis, or other specific strategic or trader issues. That's part of the level 4 membership, is that you can then be in contact with me. Just absolutely incredibly amazing, and I hope you do take the time to subscribe. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you'll get special level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and of course, more specials along the way. Become an askSlim.com level 1 member, no cost to you.
I'm going to the city and I'm gonna do a station.